welcome back to another episode of Never Mind the Bookkeeper. I'm joined today with Marti and Declan from Morris Palmer, and we're going to be discussing maybe something a little more topical, and it's what if Rachel does? Now, before we kick off with this is all going to be creative. We don't have a crystal ball. We can't see what's going to happen, because I'm sure if we did, we'd be doing something very different with our careers. So we're just going to have some fun with potential things Rachel could do at the budget and what that will mean to you and your money. So lots of talk. One thing that, one of many things, the 7-year rule for IHT increasing to 10 years. Talk us through that. Shall I do that?
Yeah, Marti, for right.
Okay. So this one is where at the moment you have the ability to make a gift to someone, usually money, for example, and there isn't a cap on that. Assuming or providing that you live for 7 years from making that gift, that would fall out of your estate for inheritance tax purposes. So it's a brilliant way of sort of getting excess cash out of your estate to children, to whoever you want to gift it to. The talk is that 7 years may increase. And the most common increase I've seen is 10 years.
Right.
So I don't know how, that's necessarily going to work. At the moment, we've got like a taper. So if you survive the first 3 years, from the 4th year to the 7th year, it tapers out of your estate for inheritance tax. So it would be interesting to see what they would do with any taper if it was on 10 years, whether it would be between 5 and 10 years, 6 and 10 years.
Or even if they just remove tapering.
Exactly. That could well go. So I think it would have a pretty big effect on people because a lot of people rely on that ability to make those gifts and for it to fall out of the estate.
Yeah, I mean, they're factoring that period in when they're making these decisions and their tax planning for their estate. If suddenly, psychologically, you go from 7 to 10, it just increases that unknown period. So it just makes it very hard to predict with any certainty at all, but it's quite difficult with the 7 as it is. To add an additional 3 years potentially onto that just adds to the uncertainty around the decision of gifting these assets or cash out of your estate.
I think you're right. It's already tricky with 7 years. So to add anything on.
But 7 years almost feels a bit more manageable.
Yeah.
10 years is a decade.
Yeah.
That feels like a long time. And I'm not there yet, but when you do start getting into, your 60s, your 70s, suddenly 10 years feels like quite a big gamble.
Yeah.
And
that is
what
the
does
age
that
that
look
most
like?
people actually want to start making those gifts.
Exactly. And that's the time where actually, the amount of cash that they're having maybe should be distributed or they want to distribute, or their children or grandchildren are at a time in their life where actually a big, wad of cash might be really significant.
Exactly.
Like if they're going to university, if they're going traveling, buying houses, getting married, doing those big life moments where they want to actually help.
Yeah.
It's then, what burden do you put on the people that are then getting
Exactly.
And unfortunately, quite a lot of us aren't in the position until we get to that age to
Precisely.
have
That's the other thing.
Excess assets to gift away. When potentially your costs may start to fall, and you have that extra money sitting around that you've got the ability to gift it. And unfortunately, until you get to that point, this, if it came in, would just make that very difficult to be totally excluded from the estate. The chances are that it makes it far more likely that it's going to get caught in some respect. And so, like you say, I can see it having a big effect on a lot of people.
Yeah, and I think people that are not that organised or not that tax efficiently minded, it then becomes it's all too late. So I think there is going to be a stickiness here of actually what is going to happen. How does that look, and what should people be doing?
Yeah. Exactly. And it's so difficult because it's all speculation, as you said at the start. So it is incredibly difficult to know, what will happen and what you can do. I mean, the thing that we never know is whether any of these changes will come in from the day of the budget or from the new tax year.
Yeah.
So obviously there has been talk, if you're thinking of making a gift, potentially
make it now.
Yeah.
Make it now while you can.
Exactly. Just in case, some of these things do come in from the budget. It's unlikely, almost unprecedented, that HMRC make things retrospective.
Yes. Yeah.
So it's
I think
unusual.
also, just while we're just discussing, tax and policy change in general, is, you have people that once upon a time would go, oh, that's highly unlikely. I remember coming out of COVID, someone saying to me, inheritance tax for farmers, no, that's never going to, agricultural relief, no, they would never touch that. And a few years later, here we are.
Exactly.
So, never say
Nothing's
never.
off the table.
Exactly.
No.
So sticking on the theme, what if Rachel reduces the 3,000 IHT relief?
Yeah.
What does that mean for people?
Well, I mean, that's one that can be used annually, and therefore it's albeit at a relatively small level, gives that option to slowly chip away at your estate if you've got that. And obviously, if that gets removed, it really restricts as to what you can do with even small amounts of money or assets that you're trying to gift to family members or whoever it may be.
We see quite a lot of our clients, they might like to pay for their family to go on holiday every year or something. So actually that £3,000 allowance is usually like a big part of that.
Because it's not a per person allowance, is it? Just to be clear for people.
Yeah, not a per person. It's a per your allowance, if you like, your £3,000 allowance. So to remove that or to significantly reduce it, I think it would have an impact just on things you can potentially do for your family.
Is it,
maybe the smaller things?
Is it myth that if people haven't used their allowance, they can go 3 years back?
They can.
Yeah.
Brilliant.
Again, I'm glad I haven't made tax. Thank you.
No, you can do that. And again, that's something they might start, if they were to reduce it to 1,000, for example, perhaps they'd then take away that ability to use unused allowances. So,
and I think, in this day and age, £1,000 really isn't a considerable amount of money when you're thinking about. It should be, but it's not. I mean, I'm sure there's many people that can spend that in Tesco's at the end of the month, just topping up the family fridge. So, that would be significant because 3,000 doesn't feel like a lot of a limit, especially if you've got maybe lots of grandchildren.
Yeah, exactly.
Divvying up a small pie to several recipients, and if you're making that even smaller, there's less to go around.
And I do think when you get older, you want to do things for you.
Yeah, that's it. And like you say, Marti, if it's incorporated into somebody's routine or an annual occurrence, and suddenly that gets taken away, it's going to have a big effect on people.
Yeah, because you don't know how that money, it could be parents gifting that to a child that is using it to support themselves in everyday life, and actually
just to top up for them.
Exactly, and then suddenly that becoming significantly harder.
Yeah. I mean, I would think that one's unlikely to come in on the day of the budget just because it's always been something that's run for a tax year, so it's more likely to come in from the start of next tax year, if it does at all, although you never know.
On the face of it, would it create that much in tax revenue for the Exchequer? Because it feels like it's really almost dabbling around at the fringes of tax.
I know what you mean. It's a little one, isn't it? It's a little one. You think, well, what
it almost
really
feels like finding a penny on the street and picking it up.
Yeah, it does a bit. But I think that is a little bit sort of what they sort of sometimes do, isn't it? It's easy. I think things like that are easy to get rid of, reduce without too much. What's the word?
Fuss.
Backlash.
Yeah.
So they can almost just go under radar a little bit. So, I suppose they're just easy things to get rid of.
Yeah, if it gets dropped in there with something else that maybe be considered more of a major policy change, then, like you say, it can get swept under the carpet and have some form of impact on everybody without it making headlines.
Yeah.
And while I've got you both here, and this has just popped into my head because I don't know, again, if this is a fact or a piece of fiction that I've just made up about tax law. But if you are, let's just say you're an elderly relative and you have an income from a property portfolio, for example, can you gift the income away and it actually is outside this 3,000 limit?
Yes, this is the excess.
Gifts. So basically, as Declan said, that's gifts out of excess income,
right?
Which is fine, and you can do that, and is not part of your £3,000 allowance and what have you. But it does have to be out of excess income. It can't go into your capital in any way.
No.
So you need to be able to show that. Where I've seen it work well is people with large pensions. So, you might have had an ex-pilot who's on a £100,000 pension, and actually they're only living on £30,000 a year. And therefore they clearly have excess income that they could gift out of. You've got to be a little bit careful to make sure that actually, you didn't take your last holiday out of your savings.
Right.
Because everything has to, you have to be able to show that everything has come out of your income and it truly is excess income.
Right.
So you've got to have quite a good income, I would suppose. And like I say, the time I see it is with these very good, probably sort of final salary pensions, which the older generation may have.
Yeah. Okay.
But yeah, good question.
Perfect. So moving on, what if Rachel decides to put NI on land and property? Who wants to take that?
Yeah, I'll take the lead on that one. This is would have a massive impact, really, where you've got so many landlords currently subject to income tax on their rent. But if they suddenly had to be subject to NI on top of that, it's going to be a huge extra chunk of tax that they're going to have to fork out for.
And what would that be percentage-wise, just for viewers?
So it depends which class they apply to.
Yeah,
these sort of
right.
things.
I imagine they'd probably go down the route of treating it like self-employment income, I would assume, which would, I would say 6% at the moment. 6%. Up to your sort of 50,000 and then the 2% above. So it's still going to be a big chunk if they were to deem it in that way. I mean, it's difficult to know how else to do it, but that's that's sort of where I've read articles on it and sort of seen things crop up. That's most likely, I think, is that they would, rather than defining it as rental income or self-employment, it's just all defined as like a business income, I suppose, self-employment income, and taxed and denied in that way.
And you could sort of see it going along that lines with the introduction of MTD for income tax. And if it's going to be treated alongside like rental
Very
is,
true, actually, yeah.
It somewhat comes at the time where they're implementing that suddenly it becomes blurred as to what's rental income, what's trading income. And it's all one and the same, which would go hand in hand with applying it to being relevant for NI. And then suddenly a whole different tax is being introduced on an income that historically has only had income tax applied.
It's actually a really good point Declan made, where he referred to MTD, which is making tax digital, and the requirements for landlords and self-employed people with income over 50,000 from April next year to submit these quarterly submissions. So not to pay the tax yet, but just to make the submissions. And actually, I hadn't thought of that, but Declan's very right in sort of saying, well, already they're sort of putting those two things in a similar category. So, yeah, interesting. I'd not thought of that actually until you said that, but that could suggest that that is something that would then follow. So one to watch probably.
Yeah, and I think with the difficulty of making, I suppose, property work in terms of making a profit from it seems to get harder and harder and harder. So is this going to be the final push to those that are just surviving being private landlords, do you think? Do you expect to see more people?
If that was to happen, I would say it would be,
it's just sending the wrong message, isn't it? For those that are already thinking, I probably don't want to keep going with this.
Especially when they've just got one property maybe left.
Yeah.
Yeah, I would think so. I think it would be.
And would this push people to then actually maybe put it into a company?
Quite possibly.
Is that the thinking that maybe people should be doing now?
Yeah, I mean, I suppose, if that was to happen, the NI was to come in, then obviously you'd want to act quite quickly, potentially, to try and get it into a company. Whether you would need to try and beat that with the budget, probably not necessarily. But yeah, certainly I think it would be a factor to more people considering the company route.
Okay. Brilliant. So next up on our list, we've got, what if Rachel standardises 20% relief on pension contributions, potentially remove 25% tax-free lump sum and adjust salary sacrifice rules? It's a mouthful. What if she does those things?
Well, it'd be disastrous.
Right, that's it. Let's move on. So what if Rachel does?
I think it would be disastrous. I'll repeat. Yeah, no, it basically at the moment, if you're a higher rate taxpayer and you essentially make pension contributions, then it's what we call sort of extend your basic rate band. So essentially you're getting your tax relief, I suppose, either 20 or 40%, depending what rate of tax you pay. So if they were to, what I've read about is to standardise it and say, well, actually, you're only going to get your 20% relief on it. So even if you're a high rate taxpayer, that would have quite a significant impact, I think, on people. It would be a bit like with the rental income when they said with the mortgage interest, when landlords can no longer get the 40% relief on the mortgage interest, and it was sort of standardised as 20% tax deduction. In my mind, it would be a similar calculation probably to that, I would assume. Which I think would have a big impact. So that's the standardising the 20%. The removing the tax-free lump sum is something so many people rely on. When they retire and they think, well, we've got a little pot of money coming, won't have to pay any tax on it, so I'll draw down on that 25% tax-free lump sum. And if that was removed, I think it would have quite an impact on people going into retirement who have potentially been quite reliant on
I mean, psychologically, if nothing else, to know that you've got access to that section or that segment of your pot without any tax implications, it's just a little bit reassurance, really. To have that taken away would have lots of impact in terms of people's retirement decisions, I suspect.
I was going to say, would you expect, depending on people's individual circumstances, of course, and this is what it all comes down to, that actually might prevent people from retiring because they might feel slightly, like you say, uncomfortable or not reassured by the fact that they can have this initial jot of money which they can go, right, I've got this. And maybe if they've got other, I suppose, financial liabilities, they could then settle them and then feel truly settled. I think it would have an impact, undoubtedly. I mean, there's already people we see, self-employed people who can't retire, because they can't afford to retire, and that's not that uncommon, that people will keep working into their 70s now anyway. So making it a little bit harder is terrible, really, actually. I think, to make people feel like they've got to work longer and have less of that time. But it can only lead that way, really. And I also feel
restrictions on.
There would be a piece where people felt like they couldn't actually have what's rightfully theirs. As well. This thing they've put away for all this, decades of their working career, and now they're being prohibited from accessing it.
Well, I think the increase in the state pension age, over the last how many years it's been now since it went up. I know it's aligned now, but if you think of women who were expecting to retire at 60, that's 67, that's a huge difference, isn't it? So already I think you think a little bit of your right, or what you should have had has been taken away, and chances are that age will go up again, I would imagine, perhaps before we all get there, potentially. So I think it seems quite unfair, those sort of changes, if they happen. Obviously, it's all speculation, but if they happen, they seem quite unfair.
Okay. Anything you want to add?
One other thing I thought about was that the potential knee-jerk reactions that some of these policies could cause if it's, say, going to be introduced for the following tax year, for example, then the mad rush for people to obtain this and the potential impact that has on the wider economy is potentially concerning and worrying in itself, really. Obviously, the caveat to that would be that if things are introduced immediately, then there is no room to get around it and get in before these things take
effect.
effect.
And that is something you think that could be introduced immediately, I would say, to stop people doing exactly what you just said.
Yeah. And I think in all of this, I know we talk about money in very factual ways, and we're quite, well, this is the pragmatic thing to do, whereas actually for a lot of people who aren't number nerds and love money, there's an actual psychology to this that is far more emotional than practical.
Definitely.
And I think
it's a livelihood, isn't it? People's livelihoods.
And I don't think that that's sometimes taken into account with some of these things, that especially if, for example, with this type of situation, if you've been married for a long while and one of you have been very, very ill, and then you're looking forward to having that, maybe last holiday that's, going to, be that kind of bucket list type of holiday. That's now something you can't do.
Yeah.
And it really does prevent people living, and the whole idea is that, we put into these pensions so that we can live and look after ourselves.
Yeah.
And yet it almost feels like we're having our own rights taken away from how we can access and choose to then spend what we're going to do.
And decisions being made for you ultimately, isn't it?
Yeah.
And it affects the quality of life, doesn't it?
And interestingly, this is just anecdotal, but I would expect that most people that take that lump sum probably then don't put it in a high interest savings account. They probably do spend it. So it then goes back into the economy. So actually where it feels like the government are struggling with that growth piece, actually, what is that? Is that going to stunt growth? Is that going to stagnate growth if people don't then have that lump that they're going to...
It's the messages that these policies are sending, isn't it?
Exactly. And I think it's people's individual interpretation of what does that mean I can't do rather than what does it mean I can do. Okay, so what if Rachel changes the VAT registration thresholds?
Okay, so I mean, currently at 90,000, and obviously if that's changed, then you're going to have a case of how many people are going to be caught by said change, and bringing people in that previously weren't, is an issue that is going to affect a large majority of businesses, certainly a particular level that we see quite common with a lot of our clients around that threshold level.
Yeah. And are they in typical industries? Are they mainly consumer?
Well, this is the interesting thing. I would say consumer led, and therefore they're the ones that
the ones that can't pass that cost on and then not become less competitive.
Exactly.
In that respect.
Because when I see that as a business to business company, I think,
it doesn't matter.
Brilliant. And almost forget about it. But actually, it's again impacting the individual because where those thresholds are usually that B2C environment.
The ones where I see it, or we see it, I think a lot, are you like the hairdressers and those sorts of trades where actually all it means is they're now just earning 80% of the money they're earning because 20% goes over in VAT.
Yeah.
There's a ceiling. They can't charge that VAT on because they've got to remain competitive with the unregistered people.
Yeah.
I suppose the only thing that I have heard with that is if obviously by bringing the threshold down, by bringing more people into it, it almost becomes more competitive again because more people are having to charge VAT.
Yeah.
So perhaps that would help with some of that pricing.
Is there maybe a kind of more negative flip to this where actually it starts fueling the black economy?
Yeah, possibly. With the cash.
With cash. Yeah. And then actually what would be really interesting is with some of these things, do we see the reintroduction of cash? I mean, COVID was really good at almost killing cash off.
Yeah.
It would be really interesting to see what that relationship looks like, especially for those smaller businesses where that threshold is really going to significantly hurt them.
Yeah.
Do we suddenly see an underperformance in their business?
Yeah.
Yeah, I mean, and we've seen clients that are, getting close to that threshold and then reluctant to push through.
Yeah. Where they're better off just not.
Yeah, and it's stunting growth in these businesses and these various industries that have a potential that they could unlock, but are being motivated not to.
Yeah, the fear of becoming VAT registered, especially if really and truly their ceiling is maybe only another 20,000 above now or something. Actually to then become VAT registered and lose the VAT, but know that you may be stuck at that ceiling for whatever reason anyway. Where's the incentive? You may as well not work for a few weeks and keep your income lower.
Whereas actually if they increased it, then actually where they are touching that tipping point, again, it will mean they'll be earning more money and that must find its way back into the economy. And it's really interesting for me is that it never seems to be thought of like that. I mean, I know inheritance tax, just sidebarring and rabbit holing for a moment, is a really unpopular tax. And I'm quite a big advocate of potentially abolishing it because the likelihood is that if you're given a lump sum of money, most people are technically going to spend it in some way, shape or form. Again, people aren't going to, let's just say, for example, you're really fortunate and you inherit 300,000. you're not going to go, oh, that's really nice, I'm going to put it in my savings account and not think about that ever again and continue living my life. There will be things that you naturally will go and do with that. You might buy a house, you might upgrade you might upgrade the house that you're in.
Yeah.
You might buy a car. In some way, that money is going to find it.
Yeah.
You might go on a really lovely holiday.
Yeah.
You might, I don't know, say, do you know what? I want to send my children to private school or etc. I don't ever see people that get inheritance just then sitting on it and doing nothing. And I'd be really interested to know if anyone's actually done the calculations of, if we abolished it, what would it do to the economy?
It would be very interesting.
Because anecdotally, I think it would really be beneficial. I know it's losing, a couple of billion in tax receipts, but I actually think people would spend it.
Yeah, and I do often wonder what is the mindset of individuals that once you've inherited and been taxed a large chunk, does that then change your mindset of what's left? Suddenly what I've got left I've got to hold on to, and then that sends the wrong message, so then you're not spending it. Whereas if you have the majority of what you're inheriting without the tax implications, does that change your attitude and you're a little bit more willing to part with that money in the future?
And I think when people do get an inheritance, in some way they want to usually or typically honour the person that's given them that thing. So, having friends and family that have had, large inheritance in really sad and tragic circumstances will go and do something like, I went and bought this type of car because this is the car my dad drove when I was little.
That's true.
And they then go and do something really special that is out of the ordinary. But, oh my God, again, it's going straight back into the economy again. Yeah. And there always seems like there's a lack of insight into human behaviour when it comes to taxes.
Well, I think it's always looked at in a very sort of short-sighted way, isn't it? It's looking at the now, it's not looking at the bigger picture often.
Yeah.
That's what's so frustrating with it.
Are there there's been lots of speculations about whether we introduce a wealth tax or whether there's like a north-south divide for properties being charged more in the southeast and London. As accountants, is there anything you're particularly dreading if it happened, just because it would be a calculation nightmare
Good question.
that would come across your door? Or anything that has changed from previous budgets that have been a bit of a mare to deal with?
Well, changing rates in the middle of a tax year,
Right.
which they did with the capital gains tax last year, that was a bit of a nightmare, I think, wasn't it? Because that was changed from day after the day of the budget. So it does just go to show there is that risk that something could happen. So from a calculation point, that was a nightmare. But this year, I don't know. Well, it would probably be if they did something like NI on rents from the date of
The budget.
I mean, that would be a nightmare to calculate. But I think it's probably unlikely, to be fair. I don't think there's anything that I can think of that would be too much of a nightmare. For me, that would be the worst, one of the worst ones, though.
Okay.
Yeah, less maybe from a nightmare point of view, but more sort of following on from the VAT threshold. If you've got other areas that I've heard about potentially being brought into VAT that were previously not, then obviously that's going to have a major impact on industries that haven't even had to consider VAT until now, if nothing else, but from an admin point of view. For these businesses.
So some of these sort of exempt ones, sort of in healthcare or something.
I was going to say, I think I saw healthcare touted about this morning even.
Yeah, I think psychiatrists, things like that.
Taxi fares.
There's so many different things that would be so unfair again. But I think anything's game, isn't it? Really, anything could happen.
It just adds to the huge admin costs that these businesses would have to incur to suddenly have to comply with that.
I was going to say, how much goes into, I'm quite fortunate. I watch the budget, I do some backseat economist drivel and decide that I could run the country better, as does the rest of the country. And then I suppose from your perspective, what has to actually happen in real time in accountancy firms when those things are being changed? Because, I can imagine that if there's anything particularly spicy or controversial that happens in November, there's a lot of clients that same afternoon, if not the next morning, phoning, going, I need to talk to you. I don't know what my life looks like.
There will be, what changes there are. There is obviously always a need to act quite quickly. And And I suppose it does depend a little on what has changed. But in the past, it's been things like NI rates going up that then have the whole salary dividend calculation as to which is more.
Yeah, suddenly you're revisiting these topics.
Yeah, so we often have to sort of revisit calculations we've done before, where we've said you might be better off having a salary of equal to the personal allowance and taking anything else you want as dividends. But then the latest national insurance rate change, we might then have to recalculate that and see whether that's still the case, or whether we need to suggest something different in terms of how they remunerate themselves. So it's those sorts of things we normally have to do quite quickly.
Yeah.
Capital gains, obviously the thing with the last year, because there was so much speculation about capital gains rates, we had quite a lot of clients who, because they were dreading what this could go up to, who cashed in a lot of investments to kind of crystallise the capital gains and then reinvest afterwards. But actually, I don't think the capital gains rates probably went up as much as people were expecting they may have. So some people ended up actually incurring tax to prevent paying more down the line, but probably didn't really need to do that. So it's always a little bit of a gamble and a risk to know quite what to do prior to the budget.
Yeah.
Because it is all speculation, and you could go and do something and then you've actually cost yourself a bit in tax when you didn't need to. And then from our point of view, as soon as we know when that budget's out, it's work out what's changed and see what the effect is on different sort of streams of clients that we've got and where people might be affected.
And do you watch it in real time as an organisation?
We don't actually normally. People normally listen to it or watching it come up, but we don't stop and all go and
All
watch
crowd round.
All crowd round. I would love to see that happen. In fact, I'd actually
film it.
Well, maybe if I could be invited, that would be really nice to actually get real time, insight into
a little budget watching.
Yeah, that would be really. Well, I'm going to say the word
crisps
cool.
and dip.
Oh, I love that. Nibbles, crisps and dip, and budget, and then we can almost say how many of these did we get right and how many of these did we get utterly
bingo
wrong.
That would be quite interesting, wouldn't it?
Exactly. Never mind the bookkeeper bingo. What did we predict right and what did we predict wrong?
Yeah.
And I guess without wanting to be political, and I know we've had this conversation privately, like in our day-to-day business lives, politics never really comes into the business vernacular, and I'm a strong advocate of, and nor should it. It shouldn't have any kind of real influence over what we do.
Yeah.
But I've noticed with my clients, they are definitely more hotly mouthed about the actions of the government that we currently have.
Yeah, no, exactly that.
And none of it's been positive.
No. I've felt completely the same, that I don't talk politically with people. I never have, and I don't think it's a good idea to. But certainly just the feeling from clients, they are feeling more political, I think. Because I think a lot of people just feel like a bit under attack with it, and particularly business owners. It starts to feel a bit personal, even though you're one of many businesses. It does start to feel a bit like, well, what can we do then? How can we make our businesses successful? If we can't do this, we can't do that, we're going to get taxed there.
Yeah, where's the light at the end of the tunnel?
Yeah, exactly. When have we turned the ship around?
Yeah.
And it actually feels like the ship may be sinking more than it was before.
Yeah.
Metaphors aside, though, I know one of the government's big manifesto pledges were they weren't going to put up VAT, income tax, NICs. And that is slowly... Well, there's been some interpretations and some very interesting semantics used, I think, for this time last year. If this 30 billion black hole calculated by the OBR is correct, or, within a margin of error, do you think politics aside, they're going to have to break their manifesto pledges? Because the things we've discussed today of what if Rachel does doesn't necessarily feel like it's going to cut the mustard to fill the hole.
It's not quite enough, is it?
Exactly. And actually, is this tinkering actually just pissing people off, when actually could we do something that, okay, you didn't want to break your manifesto pledge. I totally get that.
Yeah.
But you're going to have to, because the times have changed.
Yeah.
It's not what you thought it was going to be.
Yeah, I think you're probably right, to be honest, because as you say, some of those things, there's talks about them, but are they really going to make enough of an impact?
Yeah, it's just scratching its surface.
Probably not really. So then which one would they go with? Where would they go? Would it be the individual? Would it be the businesses again? I don't know. I find it really hard to think. Corporation tax, I can't see them doing anything.
I think that
was such a large increase.
Yeah, because we went from 19 to 25.
Exactly. 6% for a lot, for larger businesses, a huge increase and really felt by businesses.
Yeah.
So where do they go?
And I think this is going to be the interesting watch.
Yeah, I agree.
Because they obviously have to go somewhere.
Yeah.
And, I'm not an economist and I'm not an accountant, but I look at it and think all of these tinkering around at the sides, it's the consumer that keeps getting hurt at the end of it. If you put NI on landlords, that's going to find its way back to, the rental income that they have to check. Everything's going to be pushed down. And ultimately, it's the consumer. So regardless of whether you're the working person, whatever the working person means, everybody is going to pay a higher amount regardless of their, fiscal position, I guess. So are we just hurting the working person because the money is just going to hit the consumer and everybody is a consumer? Do you know what I mean?
Yeah.
It just
You
feels
always can't avoid hurting them.
Exactly. Yeah. Exactly. So are we indirectly hurting the people that they're trying to protect rather than just biting the bullet and going for one of the chunkier taxes? Because I've seen a lot of conversations because, the Labour conference is happening as we're recording this, and there is a lot of people aren't talking about certain manifesto pledges. That seems to be the thing that's coming out of conference, that they're being very tight-lipped, which kind of suggests to me, are they going to break a manifesto pledge?
And as we were saying earlier, by having the budget when it is.
And delaying it.
Yeah, exactly. Does that sort of potentially spell bad news?
Yeah, ultimately it's the messages it's sending out without giving us the facts.
Yeah.
Just the worry it causes and the bracing yourself for negative impact.
And I think it's really rich when we have two accountants and, people that have been in finance and money for a long time actually talking about the marketing side of things and saying, actually, you're making our jobs lots harder. Marketing very rarely impacts us, but, this is not cool.
Yeah, it's very true. I think we need to have our next podcast maybe just after the budget.
Maybe we can do it live from your office.
Live. Come to our office.
I like that idea.
Watch it. We'll do it all then. And
and then we can maybe have real-time reactions.
Exactly, yeah.
It'd be quite exciting.
If that sounds like something you want to watch, and if you do, I sincerely think that you may need to seek professional help. But if it is something you want to watch, please comment down below, like, subscribe,